Hello, good afternoon.
Hi, good afternoon, everybody.
Yes, kumusta? How
Okay
are
lang,
you?
doing great. How about you?
I'm good. Are you going
Uh,
to present price action?
yeah, today I'll be presenting price action then with trading psychology, inside bar and outside bar, then candlestick patterns. So whenever and then low risk entry and how to have a proper stop loss entry, then psychology behind it.
Mm,
So probably if I'll be starting at any time, at any moment right now. I'm just
yeah,
doing something here so that
I
I
will
can.
wait for your uh, zoom in, zoom out. Like your if you can see a good setup in daily time frame and go to lower time frame for optimal entry, optimal risk reward ratio.
Mhm.
That's what I'm waiting.
Yeah, I'll be discussing that today.
Mm,
Then I'll be we will see the big picture first. Then after that
yeah,
one, I will mark important trend lines, then important support zone. Then after that one, we'll go to the signals, the patterns, and the
at
signal
lower
bar.
time frame.
Uh,
Mm,
more or less 4 hours. We'll check 4 hours, then 1 hour. Then I will explain
okay.
the psychology if you'll enter at this location, what's in your mind, because I believe trading is 90% psychology and 10% skills. So we have to embrace really that trading has, risk, losses. Um, uh, th- uh, Trading is a game of probabilities. So if you don't expect for losses, you don't accept the fear in trading, then there is a tendency that you will not perform well in the trading world. So that's why we have to a right or a proper state of mind, always in neutral. You'll not be in euphoria. You will not be addicted, and you will really write for the right moment to enter the market. You will not go against the market because the market will can tell anything what to do in the present candlestick formation and the patterns because there are behind psychology on the formation of the patterns. So you will see the direction and you will see what will happen next. So it's really a good thing for everybody, especially many people are struggling to learn forex trading, and the problem is they don't know that the problem is in trading psychology. Because if your mind is already prepared or has the right trading psychology, then it will be not a struggle for you to enter a trade. Then you will not be forcing your entries whenever you will find one. So that's a good thing to to discuss so that we can help any struggling traders to be successful and profitable. So this is the purpose of this group, and just a moment. Okay. Yes. So you can see my screen right now, everybody.
Yeah, yeah, can see it.
How about Raymar? Can you hear me? Actually, this webinar will be I will be conducting a webinar every Sunday, and the webinar will always be will be recorded so that anybody in the group can rewatch our webinar every Sunday. So I think I will start right now because we have limited time. It's only good for 40 minutes. So I'll go ahead and I would like to remind that Forex trading is a risky business. And if you're not well trained to do Forex trading, then you have to train first yourself in technical and uh, psychological training in Forex trading. So let me start right now. I'll go ahead and start our webinar. One more, please. Can you see my screen, Raymar?
Yes, kita ko.
All right. Okay. So let's go ahead and let's start our webinar today. I will share now my screen. Okay. Actually, I see GBP/USD in last week before the NFP. It's really a good pair to watch out. So before we have to go, we have to analyze first on daily before we go further, so that we can see what's the bigger picture of the market. So it's clear in pure price action that we can see a clear trend line from here, right? Then there's a trend line over here. So meaning to say, in this, the probability of this pattern is 75%. This pattern will reverse and 25% will continue. So that's the probability. And then as we are going to look at it, we are going to look, exponential average. Let's check 20 moving average. We can see that exponential moving average is the price before this movement was below exponential average. So always, all the time, the price, when it is far away from the moving average, it will revert back to the moving average. So this is the setup right now. So because I believe, and it has been a belief of all traders that, and it's in theory, that moving average are dynamics resistance and support. So this is dynamics, and we have, we have two support and resistance. There is what we call as static. So the statics are the horizontal one, and the dynamic are the resistance that are, and resistance and and support created by our moving average. So I'll go ahead with candlestick analysis. So we'll go to daily. I will remove my moving average. If we're going to look at this, if we're going to interpret this bar right here, from here going down here, we can see many story if we're going to interpret the candlestick formation. Just before this movement happened right here, if we go to lower time frame, if we're going to check this area right here, yeah, actually there is a trend line that we can see. So we can see that the price is struggling up, struggling up, struggling up, went back. So in this area, we can see if we're going to interpret each candle. So this candle, we can see this is a trend bar, but a bull trend bar. The next candle, it is already a range bar, right? But it's a range bar, but a bull range bar. So the next candle, if we're going to look at the next candle, we can see that this candle is another bull range bar. You can see that one, but a range bar that is moving upward. So we can call this as trending Wednesday, because you can see that the bars are, we can call a bar a range bar if it is, below 50% of the total high and low. From here, you can see from here up to here. Look at the body. It's only 50%, right? So we can see this is a range bar. And if we're going to check this one, this also, but this one is already a trend bar. Why? Because it is above the midline of the total high and low of the total movement. The next bar is a trend bar. And you can see there a dragonfly. This is what they call a dragonfly candlestick pattern. So what does it mean? It means that the price is still going upward, but this is already a range bar. So we can say that this bar is a bar of indecision. So, and you can see on the next bar, it made another range bar, right? So it's very important to interpret each bar so that you will understand what the market is doing. So removing everything like this. So we can see in this week, you can see on both ends, there is a wick, right? So meaning to say, this is a false breakout. So false breakout. So we have to determine the false breakout. False breakout. You can see there false breakout, false breakout, false breakout. So you can see a lot of false breakout, right? Right here. So the market is trying to break out, but it fails. Trying to break out, but it fails. Even right here, you can see it tries to break out and it fails. Right here, try to break out and it fails. Here, try to break out and it fails. So what does it mean? There's a lot of activity of buyers and sellers. So if we're going to find a signal, because itself in this formation, this whole thing is already a signal going down, because we can see the price has struggled up. And in this area, you can see a lot of pin bars already. So pin bars in daily, actually, this is already a good setup to enter a trade in daily. So the right location to enter a trade right here, you can actually make a sell stop order here. Green, then stop above the candle, the wick. So that's your stop loss. And one, two, your take profit will usually be this location. That's a good take profit location. And this one. And this one. So those are support and resistance that were broken. You can see that one, that's support and resistance that is broken. Support here, there's a support here. So all those supports are broken. So it's very important to watch out for support and resistance. So what will happen as a trader in trading mindset? We know that this area is a good location to sell. But what will hold us back when it comes to trading psychology? Number one that we will overcome is the fear of being wrong, right? When you have the fear of being wrong, there is a tendency really that you will not be entering on this area, right? when you enter this one, when the price will go here, there's a tendency that we will be closing the price, right? Our trade, I mean. So in trading, so that we will be successful in trading, we have to embrace that there is really a normal tendency that we will commit wrong. So we will remove this fear. So we will be in a carefree state of mind. So meaning to say that we have to accept and embrace losses. But the thing is, we have to make our losses small and our profit big compared to our losses. So
Well,
yes,
if you want to optimum your risk reward ratio based on that daily time frame, can you go down to a lower time frame, possible in 1 hour, and make an entry?
that's the good thing, because entering on a daily time frame, we will have really a higher risk reward ratio.
Risk.
Yeah, we
Yes.
will have a higher risk. So what we're going to do to reduce our risk, we will go down to next level and check on 4 hours if there is a candle or a formation that will tell us to enter the trade in that location. But actually, in this formation, because you can see this whole thing, this is already a signal bar to enter a trade. Here, actually, you can enter here, close to this area, and your risk up here. So yeah, 36. Yeah, that's a good risk reward ratio. And looking to the left, you can see that looking to the left, our entry is really close to the breakout point, right? You can see here on the left that this area is the breakout point on the previous strong movements. So what does it mean? In this location, this is really a good entry for short based on this resistance that I see and the breakout point. So regarding with the questions of Norman, I will go down to 4 hours, if what we can see in 4 hours. On 4 hours, you can see here good entry, right? In 4 hours. So this is the first attempt of the bears to go down, first attempt. So we have to mark the first attempt of the bears to go down. So this is the first attempt, bear to go down, right? So actually we can create trend line here. So if you're going to analyze this one, first bear attempt to counter the trend first. So I will mark that as low one. Means first attempt of the bears to go down. The next one is, you can see here, second attempt of the bear to go down. So we can mark this as low 2. And usually the third attempt of the bears is a successful reversal. And the channels is a good signal for reversal. So if the best area really to enter right here is
At the third touch.
third touch, low 3. We call that low 3.
So I observed that 3-touch roll is very effective, right?
Yeah, it's very effective. It's happening everywhere.
That's high probability trade.
This is high probability trade. So we will not enter here because in this area we are suffering like FOMO. Usually in this area we will experience FOMO. We fear of missing out, right? So we have really to wait for the third push. 1, 2, 3 push. And you can see this pin bar. Actually, you can enter on 4 hours. You can enter right here. Stop loss up on top. So we have only 81 stop loss, but it's still a high stop loss, right? But
How many?
83.
81? 83? What about on daily?
On daily,
That was,
the one that it's right here. It's 97.
I see. So I think in 1 hour is much better.
Let's check 1 hour after this one. But if I'll be attacking this one, when the price will hit here to reduce my risk, because this area, so most probably I will put, I can attack also this one in the middle of this area to reduce my risk, because this is a zone, right? As a whole,
Middle zone.
yeah, we can draw this as a zone. Let me erase all my drawing. No, the promo. All right, so we can see it here if we are going to draw a zone, because this is zone attack, right? So from here, if we are going to mark that one, yeah, that's a perfect zone. Okay, so if it is a perfect zone, actually, we can put our stop loss way up here and enter entry here. So we reduce our risk to still 87 in this location, or 54. So more or less, we have reduced the risk to 54. But let's check on lower time frame. 1 hour. All right. So in 1 hour, this is what we see in 1 hour. It's a perfect. Let me remove this one. The pattern in 1 hour, it's an expanding triangle. See that? So, in order to have really an accurate entry on this one, so that we are really certain that the price will be going down, what we're going to do, we will have to mark this. We will make a box here. This is one way also to reduce your risk to enter this trade. And if we're going to put moving average, yeah. So if you can see the box for confirmation of your entry, you can attack the location that I put my entry, right? Is the best entry location. So where the structure was changed. If we are going to put fractals, let me check on fractals. Yeah, on fractals, you can see that this is the first violation of the structure of the bear structures. So if you would like really to be certain with your entries, so this is the range wherein the market was ranging, high and low. So the best location really to enter is somewhere here. So when this backs, you can see a breakout, right? You can wait
At
for a pullback.
area.
Pullback here. Pullback here. And you can put your stop loss.
Stop loss above the structure.
Right here for low risk entry. So that
yeah,
is
above
for,
the structure.
yeah. So it's only 40 pips. So better,
Much better.
much better than the daily. If you'd like, you know, because the trend lines, you can see that the trend lines is a good certainty to attack the markets also. So you can see that the trend line was broken right here. Look at the trend line that we make or we created on daily. When it will break that one and it will retest this area, then make a pin bar, then actually we can attack it here. Stop loss here. This is a very low risk entry. 31.
So for optimal risk reward ratio, much better to enter at daily 1 hour time frame.
It depends upon the setup because there are setup that is low risk also in 4 hours, 7 in 4 hours. So,
It depends. I think it depends on your risk appetite.
Actually, that's also a good point, that it depends also with your risk appetite. So, but what, even though we have a high risk here, 100 pips, what we're going to do to reduce our, you know, to maintain our, you know, the risk that we have, we are going to calculate it on, let me help you, and I'll go to my FX calculator. This is how to maintain your 1% or 2%. Can you see my screen right now?
Yes.
On my FX?
No.
Let me check on my, all right. Let me stop my screen on this. Okay, where is that? Cloud. Okay, here it is. Share. Did you see that? This?
I won't encase myself in anything German.
Okay.
Yeah. So if, for example, you have a 1,000 account size. So UPN USD, 1,000 USD, right? Then you want to have a 2% risk. So you have to put 2%. Then
20.
Your stop loss is, if in daily, you can do that in daily. So we have a 100 pip stop loss, right? What pair is that? GBP USD. So we go to GBP USD.
It's a little known fact that drivers of expensive German cars don't think the laws of the roundabout apply to them. And that's fine. You play by your own rules, but it's going to cost you. I reckon
GBP USD, where are you?
And look, another expensive
GBP. I cannot see it. Maybe in the lower portion. GBP, where are you? GBP USD. Currency here.
You deserve every last penny. Shall we go to the German hat-trick? Why not? Oh, that is satisfying.
Okay, very good.
Will they ever learn? A fourth German power wants to help further my case against them. Well, it's more than welcome. Only praise. But maybe next time.
Just like, for example, I did not see the GBP USD right here. So we will just, for example, Euro USD. So we have a 100 pips stop loss so that we cannot violate our risk appetite and we can maintain the 1% or 2% risk based on our account size. So you just click it, calculate. So meaning to say, your position size will be 0.0220 lots. So it will be 0.02 lots. Many lots. So this is the best thing that we're going to do to protect your capital with this entry.
So you reduce your lot size.
Yeah, when the distance of your stop loss is high, So you have to calculate, use my FX book, and reduce your you know, position size. So that's the best.
But the reward,
Reward.
how's the what's the reward in daily compared to hourly? Is there a big
Okay.
difference?
There is really a big difference on that, because if we're going to analyze, let's go analyze the take profit. Okay, let me.
Because I believe for optimal risk reward ratio, it's better to go to the lower time frame.
Yeah, that's true. But let me check on. Okay. So like this formation. So talking about risk reward, we have really to look for just like this. We can calculate our risk reward, even not looking with the support and resistance. We'll go back to daily analysis. Remove everything, our trend lines, fractals as well. All right. Hello, Mohab. We started. We have started already. Welcome.
The blame game, and it's very communist, ladies and gentlemen. Hello, this one's a big one. Look at this big user sign.
So if we're going to look at this Norman, what happened is, this is, if just like for this. So if you'd like really to target your, have a better risk reward ratio, first target will be exactly the same size of this pin bar. That is 1 to 1 R. See that? So how many pips? You risk 100, you earn. So this is a good first TP area according to the size of the pin bar. That's number one. And number two that you will be looking, so it's perfectly right when you are going to measure the hole, just like for this one. And bring this right here, that one, and come on. Okay. And the whole thing. Okay. So if we're going to measure that one, this is measure moves. Measure moves. This is 100.5 pips, right? So measure moves 100.5 pips. Very perfect. You are very safe. And before the market reacts, right? So this is 1:1 ratio. But if you'd like to trail your stop another way so that you can squeeze the whole trade, because this is a good reversal pattern on that area, we are going to use, we can also use our exponential moving average, our trailing stop. But it's very far. Or we can use 2 candlestick pattern trailing stop. So just like for example, 1, 2, 1, 2. So if we have a trailing stop right over here, that's our stop loss. Then we can move it 2 candle trailing stop, meaning to say we have to count 1, 2. When the market moves 1, 2, then another 1, 2 candles. When this candle reaches here, we can move our stop loss here, our trailing stop loss. So the same thing, what happened is the same take profit that we have right here. Let me measure that one for you. Oh, it's almost 97.9 pips. So as well, you can also use the support and resistance as your TP. Just like for example, this one. So the market will always or test the moving average as a dynamic resistance. So up loss here, entries here, and take profit here. And that's the option. So because if we will leave money on the table, that's very painful emotional trade. I lost the money. I lost the money. It will destroy our carefree state of mind. So it's really also to watch. It's really good to also to protect our profit. So we can do this way. So how many pips we have? So we risk 112. Our take profit is 199. So 1:2 R to R ratio based on daily analysis. But not only that, we can see here that this candle ended in a trend bar, right? This one is already a range bar, if you are going to look at this, but still favoring the bears. But so when it is ranging like this, you will suspect that the market will turn around up. And what happened? It really turned around, but it went back almost close to our entry, which is the breakout point on smaller time frame. If we are going to check this one, right? Hello, Moheb. Welcome. Oh, you're outside. You're along the beach. That's my buddy, Moheb, from Australia. He's in position, probably he's on standby mode. He's not talking, but anyway, he is in our webinar. So, he smiled. All right, Moheb, we will continue. So, anyway, if you're going to do this, so if another trading psychology that will happen, if we cannot have a proper take profit right here, what will happen? Another emotional pain. So it's really, we have really to accept the fact that trading, there's really a probability of losing the trade, the trade, but we have to manage our risks, and we have to protect our profit at all costs. So in this formation, if we are going to analyze this one, as the market is moving downward, we can see here that the daily ended in a pin bar, right? And you can see here another trend line form.
Will, please share your screen.
All right. Sorry, I forgot. Okay. All right. You can see that one. That on this daily time frame, even on daily time frame, we can see that there is already a territory that is broken, and there is a trend line good to attack, right? So we can see that this area, this is actually high 1, high 2. Let me check. In daily, high 1. This is another high 1. So, all right. Okay. This is low 1, low 2. So in daily time frame, I can mark it here. So low 1 and low 2 that is first time that the bear will attempt to go down. So first attempt 1 and second attempt 2. So if we're going to go to 4 hours in the trend line, you can see here that it's more clearer, right? There is a trend line on daily, but we can draw another trend line on 4 hours, right? Here. So this area is really a good area for attack, and it is confluence to this breakout point, right? The area that the price cleared. So trend line, trend line. So in this area, it's a good area also to attack this area.
You can have a second position in that particular area.
Yeah, you can have a second position. In this formation, you can see this is the range bar. But if we're going to observe a violation of the territory, this is the high of this range, and this is the low of this range. So when there is a breakout, we can certainly attack it here. But in the concept of the trend line, we can look to enter right here in this location. So let me check on daily, what we can see on daily on that location. You see, on daily, there is a pen bar formed and two attempts of the bull to break that area, right? 1, 2. So this area right here, yeah, the same thing. So this is really a good location for entry. So if you are an aggressive attacker, so you can attack certainly right here because this is already a zone. So I can see here, if we are going to put fractals in this location, fractals, you see fractals? So in fractals, we can create a zone right here, up to the body. So we can create a low risk entry right here, our stop loss here, red, then our entry below that zone here. So how many pips? This is a low risk entry. Only 33 pips, low risk, right? And take profit for this is right here, almost 200. So it's a good TP area, right?
So that's 1:6 or 1:7 risk reward ratio.
Yeah, if we are going to calculate this one, risk reward ratio right here, 34, going here, 175. 175 divided by 34. 1:8, based on hourly time frame. But when this will work out, you can see here that this is really a clear reversal pattern, right? This whole area is a clear reversal pattern. So when this area will clear, right here, then there is a retest. You can see the fractal here is retested. After that retest, you can bring your trailing stop here. And then you can wait for how many, it's 2 days. You hold this for 2 days, 1, 2. Hold for 2 days. You got already a 46 pips profit, right? To squeeze more, you are going to hold your entry right here because in this location in daily, look at in daily. Let me erase my drawing. In daily, this is already 2 touches, right? 2 touches with the trend lines. And here is 1, 2. So even with these 2 touches, this is our, even if I'm not looking in 1 hour, this is the target profit that we projected in this entry location, right? It's 200 plus TP, 200 pips. So low risk, but we have to always remember that our mindset, we will not be affected, we will not be afraid, we don't have fear, but be careful of overconfidence because you might be reckless sometimes. And be careful of being addicted of winning and in euphoria. So meaning to say, when we trade, we have to be in neutral state so that we will not be affected by the volatility of the market. So if you are going to spot this area, and we will go back to daily, to 1 hour. We spot our entry right here, right? In this location. And then this is a trend line, right? 1, 2 touches. So I expect that there will be a third touch on this trend line, looking at only on one hour. So it really happens. Okay. Even without trend lines, we can see that this is a good TP area with the trend lines. 1, 2. So this area, stop loss, entry here. This is aggressive entry. And projection of our TP right here. Because of this trend line, I will consider also this trend line going down. Let me draw another exponential. Yeah. So as the price will go down, I can trail actually after this one. This is I'll change this to color red. I can bring my trailing stop here. After it went down, I can bring it here, following the moving average. Then there is a good clearance of the moving average. I will bring my TP here. And then it moves right here. Then there is, you know, a fallback. After this fallback, I will bring my trailing stop here and maintain my take profit in this location. So what happened? It's a good location really for an entry, right?
Will your TP in hourly is based also in daily, right?
Yeah, it is based on the trend line of daily. Just like, for example, if we're going to erase this from, if we don't have that information yet, and what we see is like that, you can draw this trend line right here. 1, 2, that trend line you can extend down, and below that will be, yeah, if you are going to look that one, if you are going to extend this area, it's a support area, right? So it's a good TP location. And the first one that we have right there, this one, first TP that we have, it's a support area also that was broken and it became already a resistance. And this area, if we're going to draw right here, that is a support. Because all of this high and lows are support and resistance area if you're going to look at it. So just like, for example, if I'm going to draw support and resistance, the first support resistance that we can see in daily, that one. Then this one is support as the price will go down. And right here, that are support. So we will watch out that all the time. After it was broken, we can consider it. You can see here, one touch, down, touch here, down, touch here, down. And after that one, you can see here, this is a breakout point, right? Support. So this is another TP location. Even not looking at the trend line, this is very confluence area. There's a trend line, plus there is horizontal line, or static support. We can call this trend line a static also, but it is twisted. So, and the next TP here, because this is also support, this one. that is a support that is not broken. If I'm going to make a zone right here, a zone of support, I will make a triangle. Tip of the wick, bring it to the left. Did you see that? It becomes really a good support zone. So support area and resistance area are a good location for TP. So that's the thing is. And let's move forward because I'm going to I started at 12:30, so it's almost 4 hours, right? And thanks to Zoom, my hour is extended for now, so we can go on. So before the NFE happen, if we are going to look on 4 hours, if you are watching 4 hours on that NFP, we can see here a lot of signs that the market will turn around. So I'm going to remove all my drawings so that I can emphasize. Okay. If you are going to make a trend line, so what we're going to do first is we're going to make a trend line. From here, going down here. From here, going down here. So if we're going to apply our first attempt of the bull to go up, second attempt of the bull to go down, so from here, we can see that this is first attempt of bull to go up, high 1, including this area. So that is high 1. This is second attempt of bulls to go up, high 2. Usually, third attempt will reverse, right? High 3. Did you see that? So bulls. And we can see here a lot of signals, right? Before that it happens, we can short it here for a short term, right? Up to here. So actually I traded this area. I shorted, but I was not able to capture this movement up because, you know, I'm studying as well with Ichimoku with K. So we have some analysis, but I therefore conclude that PA is the mother of all. So Ichimoku is a lagging indicators, but it's also good for support and resistance. So if we are going to analyze this one as it moves down, we can mark it here breakout point, right? You can see that one. After breakout point, we can make an entry here. Actually, this is my entry. I entered it here. So I go to 1 hour time frame. You can see that this is low 1, low 2, low 3. Although it's not a perfect trend line, but it acts low 1 and low 2, low 3 entry. So low 1, low 2, low 3. So this is my entry. So I entered here, all the way up here. So 1, 2, 3. So it's 1, 2. Attempt. Sell here. I sold it here because what I see in this candlestick formation, we call as double top tweezer. This one, this is a tweezer. After a tweezer, we see
Mr. Top.
a tweezer top. After that one, we see a evening star. So if you are late, but this is already chasing, but the moving average is holding, and there is a clear breakout. Actually, you can re-enter right here. You can enter here. Your stop loss is here. Actually, I entered in this location. I posted on the group that I have an entry on this formation. So this is my entry. That's my entry. And one, take profit here is measure move. So you can see that one, there is a reaction right here, because if you are going to analyze it once more, that's a zone. There's a breakout. If you are going to measure all the way up from here, that is 74. From here, probably 74. Oh, it's more than. So measure move, that is measure move. When the market has a strong move like this going down, it will create another equal moves right here. They call this as N wave. This is a very, this is another form of N wave. 1, 2, 3. So that's an N wave. So let's get back to analysis of each bar. You can see here, this is trend bar, right? So when this is a trend bar, so it's good to enter on the next bar. Another trend bar. But the market reacted here. You can see here a doji. So meaning to say the market is balanced. But the bear made another trend bar. We can see here a pin bar, a spinning top, a spinning candle, right? But it ended as a spinning bull candle. So we can see that this is a range. This is the whole range. From here. So actually, you can re-enter if you have not entered right here. When you can put a sell stop over here and your stop loss over here. How many pips? 24, 45. So this is 1:2. So there are really a lot of opportunities. But the thing is, my question is, how's your psychology? Are you fearsome? Do you have fear of missing out? Do you have a tendency to leave money on the table? Or do you have a fear of losing money? If although all of those fears are in your mind, then you will not be a consistent trader. You have to remove all of those fears. That you'll be in a carefree state. Just like, for example, if you want to throw a 10 free throw on a basketball, if you're afraid to throw a ball, you'll never make, you don't have a probability to make a shot, right? So I'm certainly, if you are really a good shooter, in out of 10, you can have 5 points out of 10. And if your risk reward is like this, low risk, entry, small losses, and big profit, although you have losses, you will end up or ended up with a profit, right? So the nice thing that we're going to analyze before I'll move forward so that we can finish all the analysis here. So I'm going to remove all this drawing that I have so to prevent confusion.
Will.
Yep. What is it?
If I want to improve that, instead of making an entry and the daily, I think I will made an entry on the hourly, but my TP is based on the daily and my monitoring, and I will hold the trade. I have nothing to fear because my monitoring is on the daily, but my entry for optimal risk-reward ratio is on the hourly. So just to improve the trade, just to improve my risk-reward ratio, it's better to enter at the hourly.
That's really the right thing to do. Just like, for example, that's why we need to begin all our analysis from daily.
Yeah, but you have to do first the top-down analysis.
Yeah,
right?
From daily, then go
Yeah.
to hourly, there is what we call as three screen analysis, meaning to say three time frame analysis.
So it's
You have
different from the top-down analysis.
top down
Or
is, I think top down is from daily going down, right?
I see.
So
But
top
it's
down,
I think the concept is just to have an optimal risk-reward ratio. So, and you want to improve your trade. So I think it's better to enter the hourly time frame.
it's also good to enter on hourly time frame, but you have to make it sure that your entry is close to the trend lines and daily. Just like for example, like this. See this one trend line. This is a trend line, perfect trend line. So if you see this in daily, you go to hourly. When the price is close right here, you go to hourly. What did you see? You can make a zone right here, because if I'm going to make a fractal on this location, I can make a support zone. Fractal. Where is my fractal? See that one? There's a two fractals, so I can make it my zone here or here. So if you're going to, when there is no violation of this fractal, as it what happened, there is no violation of the trend line that we have here. So if you go down to hourly, you can see you have to make it sure that your entry is as close to the trend line in daily. Or, and if you're going to go to 1 hour, all your entries must be close to the trend line in daily. Look at it. Right?
Right.
So that you will not be caught up, because daily is always respected. Higher time frame will likely hold. So you have really to observe because not looking at to the left, if we're going to go to the daily and I'm going to extend the zone, perfectly we can catch the zone going to the left. Look at it. I'm going to extend. Do you see?
Yeah, that's what I mean. Your monitoring is on the daily, but your entry will be on the hourly.
Or 4 hours.
To increase your to have an optimal risk reward ratio.
Yes, that's correct. You have the purpose of that is to reduce your risk. You can reduce your risk.
And extend also your TP.
Yeah, you can extend as well your TP. And by looking at daily, you cannot see any patterns, right? Look at daily.
Yes.
What did you see? Nothing. You can see only.
So you're monitoring. So in order for you not to be scared, you have to monitor on the daily, not on the hourly, right?
You can monitor on hourly and daily. What are the formation as the price go up? Daily, hourly, or 15 minutes? Just like, for example, I was actually spotting this area. Actually, I'm a victim of, fear in this location. I have actually an entry in this location before the.
Because if you are monitoring, I think on the hourly, you might be scared, But on the daily, you are pretty sure, because all you have to do is only one candle on the daily. If you hold your trade for 2 days, 3 days, you just look for a candle.
Yeah, that's
right?
true. That's true that you will not be.
But on the hourly, you have to look for 12 candles. 24 candles. You might be scared. Oh, it might be go up. Oh, it might go. It might
Go down.
Hit my TP. My SL. It might hit my SL. So your tendency is to close your trade.
Yeah, that's the tendency to close the trade. That's the effect of a fear in trading psychology. So that's why we have to remove all the fear.
But if your monitoring is only on the daily, all you have to do is all you have to look or to monitor is only a candle, right?
Yeah, that's good also. That's also a good point. But it's also good to look on hourly and H4 and 15 minutes. So
Nice.
I will show you why I consider that one, because as I mentioned to you, there are many patterns that we cannot see on on daily, right? So if you are going to look at this, what did you see on hourly, on 4 hours? What candlestick did you see? It is inside the zone. You can see here trend range bar. You can see here another range bar and a climax, which is a bear trend bar. After a bear trend bar, we call this as candlestick harami, a mother with a with a baby. So in this location, this is really a good entry location in this area.
For
Why?
long.
For long. If you are going to look at this, you go down, we see here that this is already an inside bar, and this fractal was not violated, right? And we are in a trend line. Look at this. If I go to 1 hourly, we can see a lot of signals, right? I see another formation. This one. This is a hammer, right? So meaning a hammer is a signal of going up.
Yes.
So after a hammer, we can see a lot of inside bar right here in hourly also. If I'm going to check this one is a mother bar, but there is an outside bar that went out, but it failed to break out. It go back, but this candle still maintained as an inside bar. Although this hammer tried to break out, failed again. Then right here, you can see here a pin bar on hourly. But on this location, you can see this is already a good entry. Actually, you can put a buy stop here, and that's a conservative SL. Entry here. This is another also nice strategy to enter a trade. How many pips? 28. Low risk entry, right?
Yes.
If I go down to 15 minutes, what are the formation that you see on 15 minutes? You see a lot of formation, right? You can see that this is a trend line. And now you can see as a whole, this one, we can call this as a triangle from there, right?
Yeah.
Ascending triangle. So this is already a good signal that the market is moving up. And on 15 minutes, we can see here, this is the first time as a whole, this is the first time that the bull tried to go up. One. This is the second time around. And this is the third time around. One, two, three. So high one, high two, high three. So this is a good entry. And if we go back to hourly, our fractal was not violated. It holds. So this is a good entry for long. And after that one, you can see here, I would like to emphasize, if you are you have a poor psychology, there is a tendency that you will put an entry here, right? So you are already PUMO on this own location, right? This is already PUMO, fear of missing out. But to make it right, your stop loss will always be here. So how many stop loss? 73 stop loss. But this is already chasing, right? if I'm going to put like trend lines, moving average, see that one? Moving average was tested. This is the first low down. It tested this area, and it was not broken, and the market turned around. So if you want to reattack right here, you can reattack on the upper side of the candle, and on this location, right there, and your stop loss, low risk. That's a low risk entry. You can do that as well. Because you know, our first priority is to protect our account, not to be blown out. If you miss this trade, do not re-enter. If you try for first one, you did not get it, try another one, and you lose it, then if you lose for the third time, stop. Look for another opportunity. Right? So that's how to prevent. And every time there is a strong movement, so it becomes already a impulsive move, right? You can see that one. That's an impulsive move. Then after that one, there is a corrective move. So when there is a corrective move like this, if you are going to analyze this one, there is another opportunity. You can see that one. If you are going to do a trend line right here, that's a zone. Zone. Actually, if your appetite, you can actually have an buy stop over here, but this is high risk. This is a little bit high risk. You can have a buy stop right here and stop loss here. This is conservative entry. 60 pips, so quite high risk. To reduce this, we go to 1 hour. What will we see in 1 hour? One hour, high 1, high 2. So high 1, high 2. All right. Okay. So what formation? Okay. This is actually a triangle in 1 hour. So you can see that you can reattack at this location here. Actually, you can put a buy stop here and a stop here. Stop loss. Buy stop. Entry here. And expect for a measure move up. So we're going to measure from here. How many pips? 157. TP by only looking to 137. Right here, it's exactly somewhere here. If your TP is 137, so surely hit TP. Perfect one. So you have to measure this impulsive move up there and expect for a movement up as long as from here. So, or you can do your measure move right here. So measure move, how many pips? 138. So you would expect 138 on going up. Reach. So it's really right here. Certainly 138. Certainly right here. So perfect TP. So that's how to catch these entries with low risk entry. And the important thing is we have really to be mastering our trading psychology so that we will not miss any opportunities. So what we're going to do is we have to watch out our thoughts as we trade, that we don't have the fear, and we will be taking only opportunities that are high probable, not the low probable one. So before that trading day, you have already a pre-planned area where to attack the market. So what I mean is, just like for example, because this is a good support. So before this day, I will be planning if the market can break this area. So I will wait for a pullback, then go down. Or if the market cannot break this area, I will wait for a failure, then I'm going to buy. So if that criteria will not be within your criteria, then don't take a trade. Don't jump with a gun, if I'm right, if that's the right term. Just like you'll be pulling your gun unplanned. So don't do that. So we have really to be following our plans. So before the trading day, you have already marked the areas wherein you want to enter a trade. If this scenario will happen, then I'm going to go short. If that scenario will happen, then I'm going to go long. And but before that, I can show you an example of looking to Ichimoku that this is a good resistance area. We can use Ichimoku as our support. See that in Ichimoku? Span A is a good support area. If that will not be broken, then the market will go up. If not, then it will go down. If the market will move like that, it will go up to this area. If not, then it will go back to Kijun. So that's a box. That's how Ichimoku will take this trade. Because when the price is away from Tinkan or Kijun, it will usually get back to Tinkan and move another measure move on the way up. So Ichimoku can help, but it will be confusing if you are not well trained how to use Ichimoku. So before using Ichimoku, you have to master it first. I will not recommend Ichimoku. So we have really to use pure PA like this. So all PA. So do you have any questions? I think we have covered everything today. And maybe you want to clarify something.
Well, I think it's cleared now to me. It is cleared now to me. You have to do a top-down analysis, looking at the weekly, daily, hourly, 4 hours and hourly. And if you want to have an optimal risk-reward ratio, you base your analysis on the daily, but look for entry at the hourly to maximize your TP and for small stop loss.
Yeah, that's correct, Norman. That's the best thing that we do. So I'm pretty sure that I shared to you trading psychology stuff, right? The trading in the zone. That's a good thing for you to study, as well as the new, a new trading, a new trading for a living of Alexander Elder is a good thing also to study, because Alexander is a psychiatrist, and Mike Douglas is a legend in trading psychology, and that's very important to learn those things, because many of us are really looking forward to learn like technical mastery, market analysis. That's the reason why that we want to learn, because we want to have a perfect entry. We're looking for the holy grail. But the problem is we don't know that the most important thing is the trading psychology. So for me, it's really important that we are going really to cover, and we are going to study the trading psychology, so that we will understand how the market, how our mind works. And most of the successful traders are, they have a good state of mind, and they have a good trading psychology. And even Alexander Elder mentions that women tend to be successful in forex trading, it's because they are not arrogant. So most of the
Who's
men
that?
have a
Pardon, Will. Who's that? Who said that? Alexander what?
Elder.
Alexander Elder.
Yes. He
I
You can share the
mentioned.
link, the YouTube link, so that they can hear the audiobook.
Yeah. I'm going to share all the links of YouTube, Alexander, so that it will be simpler for you. I'll be sharing the link for YouTube with Alexander Elder and Trading in the Zone of uh, Mike Douglas, so that you will master the trading psychology. Because if you spend time on looking for the holy grail, having many mentors, just like happened with us, Moheb and I, we have a lot of mentors. We have Chris Capri, we have Carl Borgatti, we have the Falcons, we have the Albrooks, we have almost everything. But if your trading psychology will not be mastered and will not be perfect, you will not still be a successful trader. So that's how important trading psychology is. So we have really to perfect our trading psychology. You have really to have special training on that. And this day, I actually incorporate areas wherein we tend to have FOMO and fear of missing out. Usually, the most prevalent is fear of uh, losing money, number one, and fear of missing out. And the other one is the most painful emotional experience is leaving money on the table, and that money was taken out because of the pullback. You lose all the money that you profited, and that is an emotional pain. The next time that you will have a trade, that you will experience, you'll be afraid and fearsome. So the point is, we have really to be objective in all of our trades. That's why we don't need to be prayerful. When you see that the market is uh, reversing based on your analysis, on market analysis, then close your trade. There's nothing wrong with that. And you have already gained something, and close your trade. And look for, we don't have to enter at any time. We don't have to be over trading because, the brokers they love it because they will have slippage, they have commission from us. So
Commission.
yeah, they will love it. So that's why we have to be very careful. We have to make our state of mind very sharp and clear. That we have to remove fear and fear of missing out. That's what we're going to work out. So anyway, I share actually with Jacob's effect. That's a good thing also for our meditation on our channels with the advanced mindset, Jacob's effects. That I shared actually to most of the members there, the Jacob effects meditation. Maybe I'll be sharing also to Remar. So, and that's the best way that we can, we can emulate the master. Just like, for example, if we will be learning about Mark Douglas, so you will do Jacob's effect with Mark Douglas. You'll be swapping heads before you study Mark Douglas. You have to do the meditation first for the 10 minutes. Then, after that one, because the best thing to learn things, if you have to do it slowly, do not move forward if you don't understand that section. If you understand, you can go forward, and after you finish that one, you can listen to that again, or you can read it again, so that it will be a mastery level in your mind, and it will be in your subconscious level. So that whenever you are trading, it will be automatic in your mind. Oh, I'm over trading. I'm having FOMO. I'm having fear of losing money. I'm having fear of leaving money on the table, and I have fear of losing out. So I think we have covered a lot today, and thank you so much for attending. All of this webinar that I have will be recorded, and it will be posted to our group. So if you want to review the things that we covered today, then you can do your review so that you can have a perfect entry. Because I found that most of the entries are in fear of missing out location already. It's already late because of not mastering the candlestick pattern. Candlestick pattern is also good, and also attacking the zone area and not looking at the inside bar and outside bar. So those are important things as well. The patterns, the triangles, the the descending channels. Descending channels is a good signal to buy. Ascending channels is a good signal to buy. I can show you a lot of example of that. Most probably on the next webinar that I have, I will be covering on descending and ascending channels, because we can use that on our daily trade. We can attack the market with those formation, and it is really high profitable trade. And we have to observe also the impulsive move and the corrective and the impulsive moves. And usually impulsive move will have those formation like wedges, like descending triangle, ascending triangles, descending channels, and ascending channels. So in that way, we can really master. We have a good technical abilities and supported with the right trading psychology in Forex. So that everybody here, a wannabe Forex trader, we will be a professional traders, and we will be making money from Forex trading. All right. So thank you so much
Okay, well,
for
thank you
attending
so
today.
much. Thank you for your time. Thank
You're
you very
welcome.
much for clarifying everything.
All right.
Thanks.
You're welcome. As well, Moheb, goodbye too.
Yes.
And have a wonderful day. Assalamu alaikum. Take care, everyone.
Thank you,
Bye.
Moheb. Thank you. Bye.
Remar, we have ended our webinar. Thank you for attending today. I highly appreciate it. And if you have question, Remar, just post to the channels. You have a question, Tops. I will be answering your questions. I'll be providing, if you need some, materials where you can study, just ask from me. Then I'll be providing that to you. All right? So I can help you. Okay. Goodbye, everyone, and take care.
Bye-bye.